Good afternoon and welcome to BizTech Midday Market Watch. It's exactly 1 week before the US elections and we're getting insights on what the various election strategies and scenarios mean for markets, particularly in Asia. Now, with our guest today, Vasu Menon. He's the Executive Director, Investment Strategy at OCBC Bank in Singapore. Now, Vasu, welcome to our first BizTech Midday Market Watch.
Thank you, Brian. Thank you for having me.
Now, Vasu, last week, Deutsche Bank put out 4 potential scenarios for the US elections and its potential impact, including a scenario which assigned a 60 to 70% probability that would be a blue sweep, essentially a Biden victory and a Democrat-controlled Senate. Now, increasingly, markets have been warming to this scenario. Vasu, what's your view on this?
Well, it's hard to say because the last time we had elections in the US presidential elections, it looked like Clinton was headed for victory. But then, Trump turned the tables on Clinton and surprised the markets. But this time around, I think it's slightly different. I think there is some credibility to that view that we could see a blue sweep. If you look at Biden, and he's one of the very few challengers in US election history with a more than 50-point, polling average. Compared to other challenges in US presidential history. The gap between Biden and Trump is also fairly wide, about 8 points. That's again one of the largest gaps for a challenger relative to incumbent in US history. So it is very possible that Biden could end up winning the presidency and the Democratic Party could end up gaining a clean sweep of the US Congress. If that happens, I think the feelings initially will be mixed for the markets. The markets may initially worry that a Biden victory may mean tighter regulation, higher taxes, and that could worry investors. But at the same time, when you look at Biden's complete package, total package, his package appears to be fairly reflationary. Biden essentially is talking about also increasing spending quite significantly. So while he increases taxes, he's also talking about increasing spending in areas like healthcare, energy, infrastructure. So all this essentially means that, after the initial period of concern, the markets might warm up to Biden, and you could see markets actually focusing more on the reflation theme and risk on once again.
Okay, I want to, and I'll come back to you on the risk on and the reflation theme. But I did some research in terms of the last time an incumbent US president lost the re-election, and you've got to go back to 1932 for that to happen. So statistically, actually the odds are in Trump's favor, but as you said, the jury is out in terms of whether we get a freak result or Biden victory comes in. But taking your reflation model to and discussing that a little bit further, I think the Fed's model estimates that the additional 2 trillion of stimulus would basically boost the real GDP about 5 percentage points. Now, adding about 3 million of jobs and lowering the unemployment by about 2 percentage points. So given that scenario, do you think that the taxes will probably, and there is obviously an expectation of tax increases, that will be pushed a little bit further down the track?
It is possible. I mean, I think these sort of things are moving targets. I mean, during elections, candidates make all kinds of promises, but after elections, of course, they got to bear in mind what happens with the economy. And the US economy is going through a rough patch. It's seeing a resurgence of COVID, among other challenges that the economy is facing. And, so clearly it's possible that Biden may deprioritize tax increases and focus on other more pressing issues in the short term. But I think in the longer term, it's quite clear that, with substantial spending, not just for COVID, but also for areas like clean energy, healthcare, infrastructure, the US government needs to, rake in more money in terms of taxes. And, tax increases may be, something that's unavoidable with Biden if he comes into office, but he may deprioritize it for now and say, look, let's do it down the road, not immediately, because, there are other challenges the economy is facing.
Now, closer to home, Vasu, what would a Biden victory mean for Asian markets?
I think a Biden victory is going to be relatively positive for Asian markets. It doesn't mean that Asia will see a big rally. But Asia has underperformed Wall Street, and we could see Asia playing catch up. And I say that because, you know, a Biden victory, as we discussed earlier, Brian, is relatively, I think, reflationary. And, you know, reflation, a pickup in global economies should augur well for Asia, especially because Asia is so plugged in to the rest of the world. It's, you know, very export driven, many Asian economies. I think the other thing is also that with the Biden victory, reflation means that, you know, risk assets will gain greater traction. Asian markets, emerging markets are seen as, you know, riskier assets, and therefore they could benefit from that, you know, greater traction. Thirdly, you know, greater risk on also means that the US dollar could depreciate because the US dollar is seen as a safe haven. Its appeal as a safe haven will diminish with the Biden victory. And that could be quite positive for Asian markets because typically when the US dollar weakens or depreciates, what happens is that Asian markets tend to do fairly well. Asian currencies appreciate, and that adds to the appeal of Asian stock markets.
Now, how would the Biden victory impact ties with China? Would that mean a warming of ties and therefore perhaps a truce in the trade wars?
Well, you know, I'm not sure whether we're going to see a big warming in ties because the unhappiness with China, China's unpopularity is really quite bipartisan in the US. Both the Democrats and the Republicans, you know, are not completely in favor of China. They feel that China is an unfair competitive advantage. So Biden cannot take his foot off the pedal. But where he differs from Trump is he prefers not to go after China through the use of tariffs. And that's something that's weighed on the markets and caused quite a lot of volatility in the last couple of years. So, you know, he may take his foot off the pedal as far as tariffs are concerned, but he may still put pressure on China on other fronts. He's unhappy with China's human rights records. He's also worried about China's technology dominance. You know, so on those fronts, he may still put some pressure on China, but he's clearly a lot less volatile than Trump, a lot less unpredictable than Trump. And so it will herald probably a more predictable, less volatile, you know, relationship between the US and China. And I think that's going to be good news for Asia as well. That's another factor why a Biden victory might actually be positive for Asian markets because China is so integral to the Asian story. And, you know, as long as we don't have unpredictable confrontation between the US and China, I think that should augur well for Asia.
Now, besides the US election, the cloud that's hanging over the global economy is really COVID-19. Now, there's a surge in cases in Europe. We've just had enhanced lockdowns in Spain and Italy just announced. Surge, of course, in the US as well. Now, this just adds to all the risks in global markets and global economies. Now, could you give us a view on the risk factors that we should look out for in the coming months and what measures that we could potentially take?
Well, you know, I think risk is going to stay with us for a while. I mean, we've talked about one risk, the US presidential elections. And it's not just about whether Biden or Trump wins. I think it's also about the risk of a contested elections. Now, if Biden wins by a small margin, it's possible that Trump could contest the elections, and we may not see an outcome for quite a while, and that puts markets. So more than just the outcome is the risk of a contested elections in the US. Secondly, you know, the Democrats and the Republicans have not been able to see eye to eye on fiscal stimulus, which is very much needed for the US economy, as we discussed earlier. And, you know, that's another risk factor. The outcome of the elections will also impact what happens on that front. If fiscal stimulus is delayed, then markets are going to worry about US economic slowdown, global economic slowdown. COVID-19, the resurgence is clearly a worry as well. You know, you're seeing a second round, third round effects in Europe and the US, and that again, you know, could impact global economic growth. We've got Brexit just a couple of months away, end of the year, and clearly no clarity on that front as to whether we'll see a hard Brexit or whether we'll see a deal between the UK and the EU. So again, something that's going to play on the minds of investors. So quite a lot of factors at play here, Brian. You know, that's going to worry investors, and many of this may not go away anytime soon. And perhaps the best strategy for investors, given this sort of climate of uncertainty, which I think is going to prevail for the next 6 months, perhaps even 9 months or even longer, is really to dollar cost average. In other words, to drip feed into the markets, to practice what I call time diversification. In other words, to not buy everything you want to buy in the markets in a single go, but to spread your investments out over time and across asset classes. I know diversification is something that everyone talks about.
It's a 101, right? Diversification.
It's a 101 thing, but I think this is back to basics, especially in a time like this when markets are so volatile. Back to basics is good, and it is about making sure that you enjoy risk-moderated returns.
Vasu, thank you very much for your insights. We've been speaking to Vasu Menon, Executive Director, Investment Strategy at OCBC Bank in Singapore on the first BizTech Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.